So the question is, what is a corporation? This is a very important question, especially within the context of economy and business. And oftentimes people ask, what makes a corporation? What constitutes a corporation? When does a company become a corporation? So let's take a closer look at this very important question. We begin with the definition of corporation, and it says here, a legal entity. Now, this is a very important point. A legal entity, what does that mean? Entity means standalone, right? It means standalone. It means individual, not in the sense of a human being, but individual in sense of standing alone. A business stands alone. A corporation stands alone. Once the corporation is created, it stands alone, right? So, and that's what entity means. It's a legal entity recognized by the law to stand alone in the context of business, in the legal context as well. So, a legal entity that is separate and distinct. These are very important words. Separate and distinct from its owners or founders. The corporation becomes separate entity from them. So that means, again, the corporation stands alone, right? So corporations enjoy most of the rights and responsibilities that an individual possesses, right? An individual in a society, just regular individual, have rights, they have responsibilities, they have privileges that are allowed under the law, etc., and they enjoy those privileges and those rights and perform those responsibilities. A corporation also has rights, responsibilities, and also privileges, of course, especially when it comes to taxes. Especially when it comes to taxes, they have privileges because governments want them to come in to create jobs, to boost the economy, and to be engaged in manufacturing and productivity and so forth. And so they give them tax incentives, and that becomes a privilege in many ways, right? So a corporation then once again corporations enjoy most of the rights, right, and responsibilities that an individual possesses. That is, a corporation has the right to enter into a contract. An individual enters into a contract, a corporation can enter into a contract as well. They can take loans, they can sue and be sued, they can hire, right, employees. And that's what they do. They hire employees, they own assets, right, and pay taxes, right? They own assets and pay, and individuals do that. Individuals loan money, right? Individuals borrow money as well. Individuals sue and they are sued. Individuals hire employees, they own assets and pay taxes. And corporations have all of those rights and responsibilities as well. And that's what we mean by entity. A corporation is an entity because it stands alone right after it's created, it's incorporated. Once it's incorporated, it stands alone, right? So the most important aspect of corporation is limited liability. Now, what does that really mean? Limited liability. Well, let's take a look. That is, shareholders have the right to participate in the profits, right? So shareholders are, getting profits from their investments, right? When stocks go up and they sell, for example, they get the profits. The corporation makes money, shares the profit amongst the shareholders, etc., through dividends, right? And all the appreciation of stocks, right? That are not held personally liable for the company's debt. Now, this is a very important point, and this really connects to the limited liability point I was making earlier, right? Because the shareholders have limited liability because they do not share in the debts of the corporation. If the corporation owes money, that's on the corporation. It's not on the shareholders. It may affect the shareholders' profit because if people are not buying things because corporation is so much in debt and maybe bad publicity, it will affect its stocks. The shareholders may be impacted by that, but nevertheless, they are not liable for the debts of the corporation. They are not liable for the debts of the corporation. So the most important aspect of a corporation is limited liability. That is, shareholders have the right to participate in the profit through dividends and or the appreciation of stocks, but are not held personally liable for the company's debt, right? And this is the difference between corporations and sole enterprise, or a corporation and sole enterprise, because in sole enterprise, the owner is held personally liable for the debts of the business, and the creditors can come and take the personal belongings of the owner, a house, for example, a car, for example, even a TV, for example, couch, furniture, etc., if they believe those things can be sold to pay the debt. Not so for corporations. The founders of the corporation become separate from the corporation, and if the corporation is owing money, then the corporation pays the money. If the corporation cannot pay the money, well, those managers that run the corporation, even the founders of the corporation, cannot be held personally liable. They may lose their jobs. They may lose their jobs. They may lose bonuses if they're still working. They may get demotions and so forth, but they cannot, their personal belongings cannot, it's not a risk. They are not personally liable. You can't go to their, seize their bank accounts to pay for debts and so on. None of those things. None of those things. You can touch their houses, their personal belongings, etc. And that's the beauty of corporations, and this is done so that corporations will be empowered to make decisions and to impact the economy in very positive ways, and to be able to be bold and to be able to engage in business transactions and activities that will enhance the economy, and that will boost confidence in the activities and so forth. And that's what corporation means. That is what it means, that a corporation is a business entity. It stands alone and makes decisions, bears the responsibilities for those decisions, and it has limited liability because the shareholders don't partake in the debt of the company, and that is again the uniqueness of corporations. The shareholders are not personally responsible for the debts of the company, neither are the managers or the founders. This is what a corporation is, and this is why it's very, very important in any economy.